What's up, guys? I wanted to share 8 DeFi mistakes that will absolutely wreck your portfolio. So I made these mistakes and then I lost 2.4 ETH in 2 months. So let's dive right into it. If you watch the whole video, I guarantee you're going to be losing less money in terms of providing liquidity. And before we get started, guys, this is not financial advice. This is just me sharing my experience, and hopefully it helps you. So overall, my profit and loss is still positive. And during that time, I've accumulated more crypto, and I expect my portfolio value to rise as crypto alt market rises. And if you look at the ETH value, I'm still in healthy profit in terms of ETH. Today we're going to be looking at a case study of Magic and ETH. Magic is a smaller cap gaming token. It's ranked about 400 something right now on coin market cap. And I lost 2.4 ETH providing liquidity for this token. Not to say that Magic won't perform well in the future. It's just that I didn't do well in this particular situation. So real quick here, I entered about June 3rd of last year. I exited August 5th. So if you look at my entry point, Magic has decreased 66% in terms of US dollar value, and Magic ETH has decreased 51%. So Magic lost value in relation to ETH by about 51% during the period, right? I lost 2.4 ETH, about 40% loss, and only got 0.17 ETH in fees, right? So overall negative experience, but still less than buying and holding Magic straight out. So the first mistake is not looking at relative performance. So during the past year or two, Magic has been underperforming compared to ETH. If you look at the Magic and ETH chart, we can see a clear downtrend, right? Here's a high, here's a low, right? A lower high, and then a lower low. This is on the weekly chart, high time frame stuff. And right now, it's still putting a lower high and a lower low, right? There is a somewhat bullish sign here, but again, we don't know the future, right? Maybe it'll outperform ETH in the future, but so far, even if I kept my liquidity in the pool, right, it would just continue declining in value. So in comparison, this is a Pendle and ETH weekly chart, right? Since the start of the bull market, or even before the start of the bull market, right? In 2023, Pendle has been climbing in value relative to ETH, right? The reason why is because of stronger fundamentals and people using the platform. And another example of a strong chart into this bull market is something like Aave and ETH. So during the last bull run, right, it gained a lot of value relative to ETH. Then it bled out during the bear market, like a lot of alts. And if you see during the middle of last year, right, this is a weekly chart, we could see a sign of reversal. This is the swing low, right? This is the latest swing high back in July. It broke back above the swing high, and it's been on an uptrend ever since. So when you're looking at relative performance, right, you want to bet on stronger charts rather than weaker charts. The smaller cap alts that are performing in the bull market should be outperforming ETH when ETH is showing strength. So if it's underperforming ETH, you might as well be holding ETH, right? Or if you're doing a SOL to other smaller cap pairs, if it's underperforming SOL, then it might not be worth it to provide liquidity for that particular pair. Trends might reverse in the long run, right? Like past performance doesn't guarantee future performance, right? But it could take months or years for the trends to shift and for your thesis to play out. In my experience, it's easier to ride the trend rather than trying to time a reversal, right? The goal is to get fees and also outperform the majors with the smaller caps LP positions. And another benefit on betting on a strong chart is it's much easier to hold on retraces rather than if it's constantly bleeding out in value. And the second mistake is not betting on strong narratives. So gaming has been weak so far this cycle. Magic is a gaming token and it's been performing relatively weak even compared to during the bear market. So some hot narratives this cycle are soul ecosystem, base ecosystem, memes, AI, and it doesn't mean that this will continue, right? For example, memes has been doing well during the past year, but during these few months, the bubble kind of popped and maybe liquidity will flow elsewhere, right? And the potential narratives I'm looking at currently is the ETH ecosystem, real world assets, DeFi, and gaming, right? I'm expecting some liquidity to flow into this during the alt season. And you can form your own thesis. And basically, if the narrative becomes hot, right, there's more volume in that ecosystem. You're going to be making more fees, and also your tokens are likely to appreciate in price. The third mistake I made was over allocating on a sector. Because if you're heavily betting on one sector and that sector doesn't do well, right, then it's extremely high risk. It's similar to stocks, right? If you're only buying industrial stocks or tech stocks, and if there's a bubble and there's a downturn in a particular sector, you're going to be wiped out or have much lower gains than if you allocated in a few sectors. Like I said, you're going to miss out on gains on the hot sectors, and it's hard to hold until your thesis plays out because you're feeling FOMO, right? And something that's underperforming, it might be bleeding out into the hot narratives, right? And there's a huge drawdown when the narrative dies if you allocate it to only one sector or over allocate it to a particular sector, right? Let's say you're 99% in memes. Like some people are doing that and they got absolutely wrecked when the bubble kind of popped and coins are retracing like 90 something percent, right? Even big tokens like WIF is trading under $1 now, right? For me personally with Magic, I already have a huge allocation towards gaming. The main token I'm betting on is Pixel, much lower cap, but solid team, solid community. I expect it to outperform into this bull run, and it has been outperforming ETH. But then I allocated another 12% of my portfolio into gaming again, right? Which makes it hard for me to justify like why am I not allocated towards other sectors like DeFi or memes, right? Or other ecosystem that could potentially run in this short to medium term. And the next mistake, guys, is just adding too much size. Lower market cap alts are usually higher risk in nature, right? It's going in too heavy means that the potential for loss is much higher, right? And it's going to be hard for you to hold down the loss if you don't have conviction in the token, and it might not even come back alive, right? Because they haven't reached escape velocity, right? It's not really, even for bigger alts like ETH, people are uncertain about the future, right? And like, how can you say that like a lower market cap alt are gonna be here like 1 or 2 years from now, or even 3 to 4 years from now in the next cycle, right? So in the Magic ETH position example, if I went in with much lower size, I could have lost much less, and then it's much easier for me to hold if I've only allocated, let's say like 3 ETH into the position, and it draws down like 50%. The pain is much less to hold, right? And you don't really want to full port into anything because this is the precise reason, right? Like you're gonna feel a lot of pain and maybe you'll capitulate in the end like I did. But thankfully I rotated that play into some other positions that have made me profit. Maybe one exception to this is if you accumulated that token throughout the bear, your cost basis is very low. It doesn't matter if the token is doing that well as long as you're earning fees and you're de-risking into the bull market. Right? The fifth mistake is setting ranges too tight for a smaller cap liquidity pool. Right. So the lower market cap coins usually means more volatility and there's more risk to it. If you squeeze the range, right, your APR might be really high, but the chances of it moving out of your range is also much higher, right? When you do that, you're forced to rebalance and incur some impermanent loss while you're doing so. So the rule of thumb is to set wider ranges for lower cap tokens. Use less size for tight ranges if you're still insisting on going with a tight range. And if you look at the case study, right, I have a bullish biased liquidity position. I bought Magic, that's enough for a 68% upside, and then I have some ETH left over for 21% on the downside. I stand to make more rather than like a traditional 50-50 liquidity pool position if Magic pumps against ETH, but I was wrong in this case and I was in a much worse situation than if I just did a 50-50 liquidity position, right? And since Magic dropped against ETH pretty sharply in price, the losses I incurred was much more, right? If I had a wider range, even with a bullish bias, I would have made less losses rather than having the tight range. And the range was in position for less than 2 weeks before I had to rebalance, so the fees are definitely not enough to justify the tight range. Number 6 is not caring enough about strong fundamentals, right? Strong fundamentals ties into stuff like the team, the users, the community, right? Total value locked, volume, revenue, holder count, tokenomics, and the upcoming catalyst. So why care about strong fundamentals? A lot of times strong fundamentals can lead to positive price action, right? If you see the community is growing, the revenue is growing for a particular token, right? The TVL is growing, then like a lot of traders or investors will see that as a positive sign and potentially drive the price action up. And doing your own research would really be the key to this, right? You really want to dive into the token you're investing in and develop an investment thesis, right? Because not doing that and just looking at past performance, the face value of it doesn't allow you to have conviction, right? And the reason why you want to have conviction is because a lot of altcoins have like 70%, 80%, 90% drawdowns, right? Before it reaches back up into your entry price, or before it does like a 10x or something, right? So you want to do your own research, build that conviction, invest in solid projects, right? And don't just invest into something just because you are familiar with it, right? You've used some of the tokens or be part of some ecosystem and you bought into it heavily because you're familiar with it. And that's what happened with me with Magic. I made some profits during the bear market, minting some NFTs on Magic, right? And then I sold them for a profit. I was playing like a Web3 game. I made some nice profits from that. And I was thinking, it seems like a solid project. But again, I didn't really dive in too much to do my own research. And ultimately, I lost money in the end. And the 7th mistake is not learning enough about technical analysis. If I had known more technical analysis, I would have known that Magic was in a downtrend against ETH. It's a much riskier play, right? A lot of TA is psychology based, like double tops, double bottom. People trade around that, and there's a reason why those patterns form. And a lot of traders use TA, even if you don't like it, and it becomes a self-fulfilling prophecy, right? Let's say 100 traders, 80% heavily rely on TA, right? they're buying at the support, selling at the resistance. Chances are that pattern is gonna repeat, right? And if you look at the signs, know what to look for, you're able to ride that trend, right, and profit from that. So to me, some important TA fundamentals. I'm not a TA expert by any means, right? Like during the last year, I've been heavily studying TA, and it has really helped me with my investment or trading, right? So the key indicators that I really look for is RSI, MACD, moving averages, 20-day, 50-day, 100-day, 200-day, right? Learn the difference between support and resistance, when it's good to buy or sell, right? Trend lines, candlestick patterns like doji, hammer, engulfing, right? Bullish, bearish, engulfing. Those are all key signs that you want to look for when you're doing like an analysis on a particular entry for a liquidity position, right? And you want to look at the overall trend. This is arguably one of the most important, right? Is it setting a higher high and a higher low against, Ethereum, for example? If you're providing liquidity for tokens like Ethereum and maybe Aave or Pendle, right? And really, guys, if you're providing liquidity, a lot of times it helps me to focus on weekly and daily chart, because you're typically in these positions for more than 1 or 2 months, right? Typically, my positions 3 to 6 months or even longer. And the last mistake I made, guys, was just not looking at the broader market. Bitcoin leads the market. A lot of price action follows. When Bitcoin is strong, a lot of altcoins are also strong, but not necessarily all the time, right? For example, these few months, Bitcoin holds its strength, but Ethereum has been underperforming, right? If anything, if you're doing a lot of crypto to crypto liquidity pool, and arguably more important token to look at is Ethereum, right? Because Ethereum really leads the mid and small cap altcoins, in my opinion. And important charts like SPY, DXY, Bitcoin dominance, stablecoin dominance, those are all important charts to look at. So if you look at my mistake here, right, I entered when ETH was strong, almost near $4,000, right? And then like ETH drops in price, Magic drops in price, I cut my loss, right? And this is exactly what you don't want to do, right? A lot of times it makes more sense to buy into altcoin markets when, like, for example, Ethereum retraced and you expect it to pump back up again, right? For example, in last year, August to November, any of that time is much better than what I did back in June, right? If you look at ETH and others chart on the weekly time frame, you can see here, even in the last bull market, right, when ETH rose up sharply in price, so did others, right? Others is the total market cap of crypto, excluding the top 10 crypto, right? Other second wave, right? Double top, same thing, others follow suit, right? And I do expect we see something similar this cycle, right? Like ETH pumps, others pump, right? ETH retrace, others retrace. And typically you want to take profits into strength, and then during the weakness in the bull market, maybe that's a good entry, right? For example, I entered a new ETH and Pendle pool recently, because I do expect like maybe ETH would grind up in the next few weeks or month, right? And others typically will follow as well. So some final thoughts, guys. You're not gonna make money on every play, right? You win or you learn, right? I made these mistakes, so hopefully you don't have to make the same mistakes, and then you can learn from it. But you're gonna make mistakes no matter what, right? So you just gotta suck it up and learn, and then you gotta risk it for the biscuit, right? You gotta take risks in the market. Like just buying Bitcoin is much less risk, much less return potentially if the alt market booms, but it's still risk, right? Compared to dollar cost averaging into something like an S&P 500 index fund, right? You want to manage your risk, right? If you're diving into lower cap tokens, maybe it makes sense to spread out across let's say 10 tokens in like different sectors rather than just like buying heavily into one and then it not playing out. And if you're new to providing liquidity, start out small, guys. Don't full port into a liquidity position because you're gonna make mistakes. You're still learning, right? I made mistakes. I didn't full port everything into a liquidity pool, right? I've scaled up now, but I've learned a lot since I started, right? Set a goal, guys, and execute. What's your goal when you're providing the liquidity? For example, my goal for providing liquidity for ETH and Pendle is because at the end of the day, I want more ETH out of it, right? And Pendle, I expect it to outperform ETH. So that's a good goal to have, right? You don't want to just chase APRs because you don't have a goal in mind, right? And constantly learn and try to improve. And when I share these videos, guys, I also learn, right? I'm synthesizing all these knowledge and also improve and see where my strategy could have holes or improve. And let me know, guys, if you have like better strategies or how you think I could improve. So thanks for watching, guys. If you like the video, got some value out of it, like, subscribe, and share it with your friends. All right, peace out.